This episode of Landlording for Life is brought to you by our good friends at Audible.com. Get a free audiobook download and 30-day free trial at www.audibletrial.com/landlording for life. With over 180,000 titles to choose from for your iPhone, Android, Kindle, or MP3 player, you'll find the perfect real estate investment book for you. Now on with this week's podcast.
This is the Landlording for Life podcast, where landlords explore their success and stories of failure while building a foundation to improve upon. Here's your host, Sean Morrissey.
Hey everybody, welcome to the Landlording for Life podcast for this week. This is your host, Sean Morrissey, and as always, thanks so much for tuning in. On this week's episode, we have with us on the line a gentleman by the name of Caleb Davis. Now, Caleb is 25 years old, and he has 30 rental properties. Now, he's located in Madison County, Illinois, which is just outside of St. Louis, and he started at the age of 19. So he's been an investor for a little over 6 years now, and became an investor after dropping out of college. So we thought Caleb had a really interesting story, wanted to have him on the show with us. And well, without further ado, Caleb, welcome to the podcast.
Thanks for having me.
Hey, absolutely. So tell us a little bit about your background. You got started at the age of 19, and that does fascinate me because most people don't think about real estate investment until they're, in my opinion, well into their 30s. How did you get started in real estate investment at the age of 19?
So I think if we take it and we go a little bit further back, as I was graduating high school, I wanted to be rich. I think most people have that desire. And everyone was telling me, you need to go to college, you need to get a job. So I tried that route. I went to school. I was studying information technology, and I realized very quickly my second semester in, this is not for me. I am not the type of person that can sit behind a desk and look at a computer screen all day. I absolutely hated it. Halfway through my second semester, I dropped out. From there, everyone, my dad and my mom were like, Caleb, you have to do something. And it was going to be go back to school next semester. I was going to start back up in the fall and try something else. Well, my best friend and I decided, let's start a lawn mowing company. That was kind of like an easy, low amount of money startup to make what we thought was going to be a ton of money. So we started a lawn mowing company. We made a ton of money that summer. I think I had like $7,000 left over at the end of the year in my bank account because I'd worked full time doing construction and mowing grass. Well, I had an allergy to grass and I was not going to be able to cut grass anymore. So I was like, okay, we need to start planning and figure out something else. My dad had owned some rental property, and he'd kind of, over the years, I'd been working on his stuff and learned a thing or two about rentals. So that winter, it was, I think the winter of 2011, maybe 2012, and the economy was bad. I mean, it's especially here in St. Louis, we got hit kind of hard by the recession, and property values were low. I was able to find a single family home for $15,000. I got a banker to loan me $12,000 of my purchase price, and I was still going to have some money left over to finance it. And looking back, it's kind of funny that that banker who gave me the money, because I had no work experience, nothing. I all the grass mowing, I hadn't had a tax return for that yet, so it didn't show that I made money. It was just in my bank. And the loan advisor, he actually, after talking to him, he had told me that, he really shouldn't have gave me the loan, but he's like, I'm retiring soon, and I think it'd be cool kind of to see you succeed at a young age. So that was kind of how I got started, was with that single family home. I lived in it, and I rented it out to three of my best friends, and we really had a good time living in that house together. I lived for free. I made some money, and that was really where the entire hook to getting into real estate started, because I realized, like, wow, I'm making, I think it was like $360 a month, which, most people laugh about that, but I was making that for doing nothing, and I lived in the house for free. So
no, I hear you. And once you get that first one going, you tend to learn so much that you're able to scale from there, and it tends to get easier and easier and easier. So looking at your second deal, and you had mentioned this offline, I suppose, but was that your seller finance deal, the one where you put together for an 8 unit?
Yes.
So, okay. So tell us about that. That's interesting stuff.
About a year and a half went by, and I had gotten a little lazy during that time. I was still getting some education and trying to learn more about real estate, but I was just living the 20-year-old life, like going to work, I'd hang out with friends. I didn't have a ton of, I wanted to get into real estate, but I was having trouble saving money because it wasn't, I was trying to figure out how am I going to come up with $20,000 or $30,000 to put as a down payment. Well, that winter, as I was 20, I got laid off. And I had to get a new job. I started working for a new construction company, and my new boss owned a bunch of rental property. And he started telling me, like, hey, if you don't have the money, why don't you just try and find some owner financing? Well, I found an 8-family apartment building that was completely ran down. The place was trashed. I mean, it had only 3 of the units occupied. And with what I was going to be paying, 3 units basically was going to pay my bills. It was going to be a break even. So I got the owner to finance the down payment, the 20% down. And from there, I just rehabbed one apartment at a time until I was cash flowing. And as I was cash flow, I'd put that money back into the building. And for the next, I would say 6 to 9 months, it was just like kind of a war of attrition against the building, as breaking things as they would, or fixing things as they would break, and taking all the money I was making and just continually putting it back in until I finally had a nice chunk of change saved up, and I went and I was able to flip my first house.
Awesome. So you evolved into to flipping houses from there. So you kind of had a double-edged sword, I suppose. One side being, fix and flip, the other side being buy and hold.
Correct. Yeah. So being able to buy any type of property that comes across and having the different exit strategies has really helped me grow as an investor and an entrepreneur, is being able to not pass on deals, because if it's not a good rental, it might be something I can work at on the flip side and make some money on the end, and then take that money and put it back into rentals for the long-term residual income.
Okay, got it. So to date, you're up to 30 rental units, and that's split between multifamily and single family?
Correct. Yes. So it's actually split right down the middle, and that's not on purpose. It just is the way it's turned out. Is I have 15 total multifamily units and 15 total single family homes.
Okay, perfect. Now, do you manage all your properties, or do you hand that off to a third party manager?
So when I started, I was doing all the management myself, and I found out right as I think I was around 14 or 15 total units, I realized very quickly I am not a professional property manager. It is not a strength I have. I was really bad at kicking people out that owed me money, honestly. I have just a soft spot in my heart there that evicting somebody was tough. And so I knew I was losing a ton of money there. One of my mentors at that point in time was going over with me. He's like, I was just asking, like, I'm very weak at this point. Could you really help me, help educate me and tell me what I'm doing wrong? And the greatest piece of advice this guy ever gave me was, don't focus on your weaknesses and try and make those better. Focus on your strengths and find someone who's really good at what your weakness is and pay them to do it for you. And that really helped us accelerate and grow our business significantly.
Oh, that's awesome. And I think that's a great point of value to the listeners out there. I mean, at the end of the day, like you had stated, focus on your strengths, right? And leave your weaknesses to somebody who's already strong in those parts of life, right? So
yeah, exactly.
Yeah, so by doing that, it helped you scale up, and here you are. So, with your property manager, I guess what would you recommend our listeners look for in a property manager based on your experiences thus far?
So, I mean, you want someone who's going to work hard, and because it's your money, right? If they don't fill your units, or they fill them with not high quality tenants, you're the one who loses. They only lose their 6, 7, 8, 10%, depending on what they charge. So to me, it was just looking over I wanted someone who had a lot of properties, but not too many to where I felt they were overwhelmed. So I met with, I think it was 3 different companies, and the company I went with, H3 Capital. When I sat down with Matt, who's the owner, he not only did he kind of tell me about his company, but he had a really interesting way of going over how much money I was he really delved into my company and wanted to know what I was struggling with, which was the property management side. And then he gave me a lot of really good advice. So I could tell not only was this guy a property manager, he was also an investor as well. And so for me, that was really important, was to have someone who didn't just do property management, because there's a lot from what I noticed, a lot of companies that they only manage property, they don't actually own their own properties. So in my eyes, they don't look at it the same as what an investor would. Yeah,
I think you're right about that. In fact, I think another important point there that I was reminded of as you were talking about your experience in interviewing Matt was that, one thing that we would try to do as a third-party property management company is try to get that particular investor's end goal in mind, right? So maybe they're a landlord by mistake, right? Maybe they're underwater on their mortgage and they have to rent out their house. Well, they're not going to be in it for 10, 15, 20 years. Those might be your 3 to 5 year type of landlords. Somebody like yourself or myself, ultimately we might be doing it for life, right? So ultimately, building those management services around end goals, not only creates like a preventative maintenance plan, but ultimately helps kind of shape the relationship over the long run. And then ultimately between the landlord or the investor and the manager, you're able to kind of set the pieces in place for a successful relationship. So, anybody out there who's shopping for property managers, that would be one thing I would stress is try to make sure you're talking to a manager from a scope of, having them understand your end goal here and where you want to be in 5, 10, 15 years. So anyways, having said all that, not to get on a tangent, but let's talk about how you go about evaluating your properties. I guess, well, you just take it from there. How do you like to evaluate properties this day and age?
So I think I probably do it a little differently than most people. And in the town I'm in, we aren't looking at appreciation and what is the house going to be worth in 20, 30 years, whereas like people in higher end neighborhoods are. So to us, I have to cash flow as much as possible and pay the house off as quickly as possible, because the amazing rental market is not always going to be in this town. Some people think it's going to slip downwards. I personally think it's going to plateau. So for me, I know what our rent's for. Our 2 bedrooms are $700, $750. 3 bedrooms, we get $900 to $1,000. 4 beds, we get $1,000 to $1,100. So basically, if I can be into a 2 bedroom between 25, 30 grand, I'll go for it. If I can do a 3 bedroom between 30, 35 and a 4 bed between 35 and 40, as far as my purchase and rehab price, that is the simplest way of how I evaluate it. And we keep our prices really low because we do a lot of our construction in-house with employees. So
just to reiterate there, those numbers were pretty phenomenal. So purchasing for 25 to 30 grand, that would be like a 2 bedroom, and then you'd be renting those out for like $750.
Yep.
Oh, baby. Yeah, the cash flow on that has to be phenomenal.
Yeah.
So the way I perceive you is ultimately you're a purely cash flow investor on month-to-month rent cash flows, and appreciation's just a cherry on top, I suppose.
Yeah, so I don't look at appreciation as a big ticket item yet. To me, I would like to really build a big portfolio, and then the neighboring towns where we are going to get our appreciation, once we're not as worried about cash flow and growing as quickly as we can, then we'll start looking at those houses where you may cash flow a lot less money, but in 20 years that house is going to be worth a lot more than it is now.
Yeah, just through inflation in itself. So
Correct.
You have an in-house construction crew, is that correct?
Yes.
Just wondering what kind of cost savings do you think you see on a regular basis by having that construction crew in-house? Any thoughts there?
So actually, yeah, I can give you decently figures. I would say we probably save between 20% to maybe 30% on our rehab, because we're saving the markup that the contractors are putting on the jobs.
Yeah, absolutely. Well, that's a lot of money. That's a lot of savings.
And not only that, but our maintenance, it's super simple, because when I get a maintenance phone call, I just call my foreman and say, hey, I need you to pop off this job for the day. Go take care of this faucet that's leaking, or, an AC went out. I need this to get taken care of. So it's not, there's no waiting period. I'm not paying service calls on our maintenance. It's just boom, send him over there. I pay the hourly rate and it's done.
Awesome. Okay. Well, another thing I found interesting about your story is that you're located in Madison County, which is just east of St. Louis, right? On the Illinois side?
Correct. I live about 10 minutes east of St. Louis.
Okay. So I'm wondering, what makes Madison County such a hotbed for you to invest in? Why do you like Madison County so much?
So it's not only where I grew up. I've been in Madison County my whole life, but we're 10, 15 minutes from downtown. Our property values are low, comparable to Missouri, and our rents are almost as high. People can live in Illinois, work downtown. Their commute's shorter than most people living. And if you're not familiar with St. Louis, it's shorter than a lot of people who live in what's considered St. Louis to get to downtown. So I think we're really keeping a good high rental. Our occupancy is very high because of that right there, is we rent to a ton of people that work downtown.
Okay, very good. Well, that is interesting. It seems like you've got an interesting little niche just based on location. What about financing your deals? Are you doing strictly, residential financing, commercial financing? Are you come across the occasional owner finance deal still?
So I haven't done much owner financing in probably 4 years. I don't think I've done an owner financing deal. So what I did is early on while I was flipping, I built up a very nice cash pile because I lived very cheap through that point because I knew what I wanted to do. And I was able to get, I think it was 6 houses. The basically I paid off with money I'd made by flipping houses. So 6 rentals were paid off. I took out a line of credit and with a bank, a commercial line of credit against those properties. So then what I had been doing since then was using that money to fund my rehab. So I was basically paying cash for the purchase and the rehab side of it. And then at the end, I would take out a cash out refinance on the property, and they would loan, at first they were loaning me 80% of the appraised value. And that was really helping because we'd get a little extra on the top. And then it was like, okay, now we're getting like 80% of what we have into it. So what we're having to do is flip houses, make the money off that, and then use that to help float the extra 20% of what we need to be into the property.
Okay, very good. Now, so your financing, is it through like a local community bank, would you say?
Correct, yes. So the bank I'm using is First Collinsville Bank. And I don't know, there's probably 30 branches here in St. Louis of them.
Okay. And would you say that, like, as you've built a relationship with them over time, terms have improved? Or what value is there in having a relationship with the local bank?
So in my opinion, having a relationship with the banker I use is if I need something, I send him a text and he responds immediately. So I went through a couple banks before I really found one that I knew we were going to build a very good long-term relationship. And the guy I use now, Ryan, he's awesome. I sent him a text. Hey, here's the property. I need to do a refinance. I'm in it for this much. And I have an answer within an hour of whether we can put that loan together or not. And we just go from there. And they're using a local bank. They're going to work for you a lot more than I think using a national bank would.
Okay. Well, that's promising to hear. Now, you had mentioned prior to the podcast that you're part of a local RIA, right? And that RIA has been very helpful for you in the development of your real estate investment. I was hoping you might be able to speak about that a little bit and the value of properly networking. And it sounds like you've had a couple mentors along the way.
Yeah, so I had some really awesome mentors early on that helped me a ton, but I found out that, you can only get as much out of them as they have time to give you. And it's tough to just take and not, you have to be able to give in return. So as time went and they couldn't quite give me what I needed, I joined a program that was called 3 Doors based here in St. Louis. And 3 Doors really, in my opinion, what it gives you is the connections to a very large brokerage and very large investment company. They flipped about 400 houses last year. So you get all of their resources, all of their systems and processes they use, plus they have an entire educational course set up to teach you how to be a better investor. And then we have monthly networking events, weekly trainings. So once I joined that, which was actually last April, I just passed up 1 year of being in that program. That was when my business really went from, we flipped 6 houses to that year we flipped 15. So it was getting that education and having those tools from joining a program and joining a group really helped my business accelerate to the next level.
So are you finding like off-market deals through this 3 Doors group, or?
So once I joined 3 Doors, before that I'd been buying a lot of stuff on the MLS, and they weren't the greatest deals, but I was able to make them work because we had low construction costs. But once I joined 3 Doors, and they really taught me how to look for off-market properties, different marketing and lead gen strategies to use. From there, it just blew up, and the deals we were getting were so much more lucrative and a lot more money to be able to make after that, instead of having to buy stuff on the MLS where all the competition is.
Yeah, exactly. Okay, very good. So you're only 25 here. So I guess what are your goals for the next, perhaps 5 to 10 years? Where do you envision yourself? And I guess where do you want to be with your real estate investment at that time?
So my wife and I, we have a 5-year plan, and that involves having 100 rentals based around St. Louis. And then we'd like to have 10 or 15 vacation rentals spread out throughout the United States. And after that, we plan on selling our homes, selling our cars, and just trying to travel the world full time and live off of our rental income.
Yes. Oh, I love it, man. You've got it spelled out very well. So 100 rentals in 5 years, and then 10 to 15 vacation rentals after
Correct.
that?
Yeah, so the vacation rentals, basically we want to put them in cities where not only can you pay down a mortgage, you're going to have appreciation. Those are going to be the long-term investments that are really going to help cushion in case the short-term stuff doesn't always work out, the lower income stuff we have here in Granite.
Yeah.
And it's also, if we want to go visit Florida for a week, we just take it off Airbnb for 1 week and we have a free place to stay. Not only that, but we can write off our flight and a lot of our expenses down there because we'll be checking on our property.
Yeah, very good. Well, I will say this has been a fun interview. So tell me, and this is a little off script here, so bear with me, but I'm wondering, what do you think motivates you on a daily basis, or what's motivating you to get to that 100 homes?
Honestly, like the travel. I am 110% an adrenaline junkie that I love to see the world. To me, there's nothing more fun than going to Colorado and snowboarding in the winter, or spending my summer in Jamaica or Mexico. I love seeing other cultures, how other people live their lives. And that's why eventually I want to get to a point where I can completely submerge myself in their culture for 3 or 4 months if I want to move to Thailand and live in an Airbnb there.
Yeah, love it. All right, my friend. Well, 3 questions we ask each of our interviewees. I wanted to run by you. And our first question is, what book, website, or perhaps podcast might you recommend to our listeners that are just getting going in the world of real estate investment?
So for me, the first podcast I really got going and helped me a lot was Bigger Pockets, which I'm sure a ton of people really go over that. So I would say, to not be cliche, say read anything by Gary Vaynerchuk. All of his books, they don't apply to real estate investing, but I think they just give you a really good mindset of yourself and how to run a successful business.
Okay, very good. Any I guess you'd mentioned podcasts there. Any website or any specific book you like?
So the Thank You Economy by Gary Vaynerchuk, I absolutely loved everything about that.
Okay, cool. Appreciate it. So what would be one piece of advice you'd provide to aspiring landlords or real estate investors?
So I think I threw one out earlier, is don't focus on your weaknesses, focus on your strengths and be the best version of you. But outside of that, I think for new people is take action. Don't be afraid to just jump out there and try and make a deal happen. You're going to learn so much on your first deal than sitting behind a computer screen for 2 years trying to prepare for that.
Well, and it's stated all the time, right, on various podcasts, frankly, of the analysis paralysis, and you can analyze yourself to death and the whole bit. But, I feel like part of the point of this particular podcast is to spell out your experiences so that others out there can feel more comfortable. So, to your point, there's a point to analyze things to death, but at the same time, there's a point to dive in, and to each their own. But, yeah, I once you get through your first deal, it becomes easier from there, for sure.
Correct, yeah. I think you learn so much on your first deal.
All right, my friend. And then what would be the best way for our listeners to contact you if they're, just interested in learning more about what you're doing, or might have a question or two about scaling up?
So the best place would be Facebook. I don't know how hard it would be to find me on Facebook because I have a very common first and last name. And then outside of that, I guess I can just put my email address out there and anyone can send me an email and we can chat more from there. It's alexanderproperties618@gmail.com.
Fantastic. Cool. Anything else you want to share at all, or?
No, thanks a lot.
That'll do it for this week. Okay. All right. Well, Caleb, thank you so much for being on our podcast for this week. Appreciate everybody else out there who's listening. I hope this particular episode is valuable to you, and certainly in the world of those that are looking to scale up going into the second half of 2018. So until next time, thanks for listening to Landlording for Life, and we will see you with our next episode. Have a good one, everybody. Bye-bye.
Thanks for listening to another episode. If you like what you heard, leave us a 5-star review and join our Facebook group to share your deals and ideas by searching @Landlording for Life. See you next time.